What are your expectations not only for this quarter, but also for the guidance?
Right. Well, certainly the net interest income line is going to be one that's watched very closely, not only for JP Morgan, but for all the banks that are starting to report. We think that certainly things look positive going forward, particularly compared to where the estimates are. We know that rates have gone up. We know that the Fed is much less likely to cut in June. We actually are in the camp that thinks that we're only likely to get one cut this year, probably not until much later in the year. And so that spread that they can earn should be better than what's expected. We think this quarter will come in modestly better than expected, but there's an opportunity, given that expectations for the next 2 quarters are for that number to shrink fairly dramatically, for those estimates to get revised upwards.
You know, that talk about no cut seems to be growing. Neil Kashkari kind of fueled some speculation that there might not be a cut at all this year. What does that mean for these banks? And also, what does higher for longer mean? If you remember, I'm sure you do, last year, the Silicon Valley Bank issue, a lot of that was caused by the rates being higher for longer and also spiking pretty dramatically. And just this week, we've seen rates on the 10-year spike by 20 basis points.
Right. So we think that the higher for longer in and of itself is a scenario that is very manageable, not only for the banks, but really for the economy as a whole. It certainly, as we just talked about, is positive from a net interest income point of view. It allows the banks to manage the spread that they can earn. The spike is
Understood, but what
has
about
us
commercial
concerned.
real estate? That's a different matter
Well,
when it comes to this higher
yeah.
for longer situation.
Well, that is. And so one of the reasons why we like the big banks rather than the regional banks is just that commercial real estate exposure. There's much more protection from the big banks. It's a smaller part of their book of business. And so we are concerned about that. I'm sure everybody's read the article about St. Louis. There are other cities, particularly in the Midwest, that are struggling like that. And so we need to be careful. We
Okay.
are cautiously optimistic that the spikes that we see in interest rates will be more modest. The Fed is certainly paying attention to their pace of their declines in their book of business. They're talking about slowing that rate of letting those debts mature so that we don't get a spike
Okay.
from a short funding gap.
What about several other factors that are a big influence on how these banks perform? One of them, the IPO market. The other, just consumer deposits. Is there some deposit risk with these higher rates? So much talk about the money coming off the sidelines, but it really hasn't. There's still a lot of money sitting in those money markets.
There is, and we do think that can be a risk, particularly for those banks that are much more dependent on those consumer deposits. Again, that is part of our caution on the regional banks. We think it's likely that that money stays in money markets for longer. It's pretty compelling if you can earn close to 5% or more in those money market accounts. Um, I'm sorry, the other question was on the, what was the first question?
Yeah. It was on the IP market, but before we're almost
Oh,
out of
right.
time, Nancy.
So
So
we
I do
are
want to ask
seeing,
you one other quick question
yeah,
before we get into the IBO question.
yeah.
Very briefly, your thoughts on Morgan Stanley, and do you have a top pick in the banking sector ahead of earnings season?
We don't have strong, I don't have a strong opinion on Morgan Stanley. We actually are very partial to Evercore, as they are gaining a lot of share in the investment banking side. We are seeing an increase, certainly in deal activity overall. We're seeing an increase in M&A activity. We're seeing increases, certainly a lot of refinancings going on. We're cautiously optimistic on the IPO market. We've seen a couple of good IPOs in the first quarter. We think that there's more to come. And certainly what's going on with AI and the new business formation means that we could be setting the stage for a very strong IPO market sometime in the future.